Get ready for a bold prediction that might just shake up your understanding of the global currency landscape. The euro's rise, a 5-year forecast. In a recent analysis, foreign exchange experts at Berenberg have made a daring call, predicting that the euro to dollar exchange rate, EUS, could soar to a staggering 1.50 over the next 5 years. But here's where it gets controversial. They attribute this potential surge to underlying vulnerabilities in the US economy, particularly the persistent and massive budget deficits. While HSBC expects some short-term dips, with an end of 2025 forecast of 1.20, they also anticipate a limited retreat in 2026. Berenberg, on the other hand, believes that structural factors will continue to weaken the US dollar, drawing parallels to the period from 2003 to 2008. They argue that this trend will normalize the overvaluation of the US dollar and US dollar-denominated assets in the coming years. And this is the part most people miss. Berenberg suggests that the dollar's correction might not stop at purchasing power parity. Instead, it could continue until the US dollar becomes significantly undervalued. The recent Federal Reserve policy meeting added fuel to this fire. Despite holding rates at 4.50% as expected, Fed Chair Powell's hawkish rhetoric surprised many, refusing to signal any rate cut at the upcoming September meeting. Euro-USD dipped briefly to 1.14 before rebounding, influenced by the latest US jobs data. Non-farm payrolls growth for July fell short of expectations, and significant downward revisions for May and June sparked concerns about labor market conditions. ING commented that these developments cast a different light on the US economy post the Liberation Day announcements. ING maintains a year-end forecast of 1.18 for Euro-USD, anticipating that deteriorating US labor market data could swing the exchange rate back in the euro's favor in the coming months. Markets are also growing less comfortable with Trump's tariff announcements, realizing that many of these deals are political agreements with an overall tariff rate likely near 20%, which could significantly impact the economy. Rabobank forecasts Euro-USD at 1.20 by spring 2026, as the Fed is expected to start cutting interest rates more aggressively. HSBC continues to highlight the dollar's vulnerability, citing cyclical headwinds and unanswered questions about US trade policy, budget deficits, and political pressure on the Fed. However, HSBC challenges the narrative of persistent currency weakness extending into 2026, a viewpoint they do not share. So what do you think? Is this bold forecast a sign of things to come, or will the market surprise us yet again? Share your thoughts and predictions in the comments below.